Most people don't even realize what's happening until it's too late. You walk into your bank, ask for a withdrawal, and they tell you there's a limit now. No warning. No explanation. Just a quiet policy shift. That's not science fiction. That's 2025. The year the silent bank squeeze.
John, are we really seeing banks limit how much cash people can take out? What's causing this?
Yes, and it's more common than people think. Several major institutions have started tightening liquidity access, blaming internal risk management protocols. But here's the kicker, these policies started quietly last year. And now they're accelerating. This isn't just about your local bank. This is a symptom of a much larger issue. And today we're exposing the full picture, what's behind it, what's coming next, and how you can protect yourself. Let's break down what's happening beneath the surface. Banks operate on something called fractional reserve banking, meaning your money isn't actually all sitting in the vault. They lend it out, invest it, move it.
So when people start pulling money out fast, the system can't handle it?
Exactly. It creates what's called a liquidity crunch. But in 2025, the reason for the crunch is more insidious. Rising interest rates, growing defaults, unstable international loans, and most of all, a loss of trust. In early 2025, a regional bank in California limited cash withdrawals to $500 per week without public announcement. A small business owner needing to pay contractors couldn't access his own funds. He had to borrow at 11% interest just to meet payroll. That's real. That's now.
John, I've seen people online calling this the start of a financial lockdown. Is that fear-mongering, or are they onto something?
It's not fear-mongering, it's trend recognition. When multiple financial institutions begin limiting access to money while simultaneously reporting record profits from lending, something's off. This could be the early stages of capital control. In fact, experts from two major global financial forums have hinted at central banks preparing digital-only rescue tools which would require accounts to stay within government-controlled systems. It's not just about cash anymore. It's about control.
All right, John, let's get practical. What should regular people do now to stay safe?
Great question. Here are 5 actions you can take right now. 1. Diversify holdings. Don't keep everything in one bank. 2. Hold some cash, enough to cover at least 30 days of expenses. 3. Use credit strategically while it's still accessible. 4. Consider precious metals or decentralized finance options. Monitor bank risk ratings. Yes, that's a thing. Some websites show how stable your bank actually is. Financial freedom starts with awareness. Don't wait for the doors to close, plan like they already might.
We asked our listeners, have you experienced limits on your own money? Here's what they said. Chase limited my ATM to $1,000. They told me it was for security reasons. I've never had that happen before. At Mike from Ohio, my bank delayed a wire transfer by 5 days, said they had to review it. At Nina G_25.
These aren't isolated stories. They're signals. And when enough signals line up, we need to pay attention.
John, play this forward. If banks continue down this path, what's next?
If this trend accelerates, we could see hard limits on daily spending, programmable digital currencies, and restrictions on international transfers, all under the guise of security. And once the door is opened, closing it becomes almost impossible. The question isn't just, is your money safe, anymore. It's, is your financial freedom secure? And in 2025, that's the real hidden crisis.
If this episode opened your eyes, don't keep it to yourself. Share it with someone you care about. Ask your bank questions. And start preparing now.
And don't forget, financial freedom is still possible, but only for those who stay ahead of the curve. Subscribe, leave a comment, and tell us, have you faced banking limits in 2025? Your story might help someone else wake up before it's too late.